Hello friends, so I'm back today with a very good topic to discuss with, and basically today we'll be discussing the decision criteria based on the returns. And first would be the return on investment, and the second is economic value added. So normally we all know that return on investment is basically the earnings before interest and tax upon the total asset which are used to earn the operating income. So this is basically something a very narrow concept, but if we discuss about say economic value added, it is a very broad and a very important concept in financial management. So this is a topic which is going to help anybody who is doing MBA finance or pursuing MCOM with finance or any other professional course which includes finance into it. So basically, economic value added is the net cash flow, or rather say the cash flow which is after tax, and the cash flow which is over and above the cost of capital. And the cost of capital is basically the cost of acquiring the finance for the organization or the company. So if we talk about economic value added, similar to this concept is a concept of earning per share, but earning per share is just limited to the shareholders. But if we talk about economic value added, this is a broader concept which takes into account for all stakeholders of a company, because in earning per share it is just the the earnings, total earnings, or the leftover earnings for the equity, and which is distributable to all the equity shareholders of the company. Whereas economic value added is something which is very broad than the EPS. So just taking an example, that let's suppose if the cost of capital is 12%, means a company is acquiring finance which is costing it 12%, then even if it is earning 10% on, say, 10% on the capital employed, it's still not a earning, it would be reduction, in a sense that still the cost of capital is over and above by 2%. So even if the company is earning 10% on its basic capital employed, still because the cost of capital is higher, so it's a reduction. So that is why, to do any investment related decision, we first also need to look into the cost of finances of the company. So basically we can derive economic value added simply by looking at the operating profit, the taxes which it pays. So the leftover is net operating profit,